So now we're ready for the last transaction, transaction H. Beth Bell's Daycare paid her current rent expense of $4,000. So our first task is to put letter H on the transaction row. So what's going on in this transaction is she gets her rent bill and she pays it right away. So the key is she's paying it right away. So let's start with cash, since it's the easiest to understand. Is cash being affected? Yes, cash is going down by $4,000. So why is she paying this? Well, this is a rent expense. So we're going to put a $4,000 under expense, and notice expenses are always minus 4,000. So in essence, it's minus 4,000. So then our next question is, does the transaction affect both sides of the equation equally? Yep, minus 4,000 on the left side and minus 4,000 on the right side. So then we need our balances, our final balances. So we'll write ending balance, and our cash account looks like we've got a total of $66,400. Our customers owe us $400. Our computer equipment is still the same at $7,000. She's still not paid her accounts payable, so we got $3,000 of debt. Her capital has not changed. Draws are minus 200. Revenue is 15,000. And then her expenses are minus $4,000. So then we have to do a final check to make sure our balances are equal on both sides. On the left side, we have $73,800 by adding up our assets. And on the right side, we should have the same amount by adding up liabilities and the owner's equity accounts. And we do. We get $73,800. So if you want to see the solution all at once, here you go. So make sure you have the same solution that I have. And let's look at this company and see if we can analyze it. The first question is this company profitable? Does she have a profit, also called net income? So we can calculate that. So what's the formula for net income? Also the formula for profit. It's revenue minus expense. So her revenues are 15,000 minus expense of 4,000. So yeah, she's very profitable for just a few transactions. So her profit is 15,000 minus 4,000. So she has $11,000 net income. And let's look at her debt situation. That's another thing that's really important when you analyze companies. Does she have a lot of debt compared to cash? Well, she's got a bunch of cash, $66,400, and her debt is only $3,000. So her company's in really good financial position. She's doing really well and is off to a great start. Good job, Beth.